Welcome back. You're watching Stockwatch, and joining me to unpack your stock-related questions this afternoon is independent analyst Jimmy Moyaha. Start sending your questions via email to stockwatch@bdtv.co.za or via SMS on 41392 or on X @BusinessDayTV using the hashtag Stockwatch. Thank you so much for your time, Jimmy. It's quite interesting what's happening on the JSE, because I think yesterday we thought that we were getting a little bit of joy, but that didn't last. And I don't know, at this point, what is the problem with the JSE? Is the uncertainty with elections? Is it a liquidity problem? What is it, or is it all of the above?
I think there's a combination of factors at play here, and I think it's more than just the JSE that's affected. If you have a look at just how markets have been moving in the month of February, I mean, Bitcoin did 40% in that month.
Yeah.
So
close to an all-time high.
That's it, right? So we're north of 60,000 there. The US Fed has come out very clear to say they're not going to be in a rush to cut rates, and that sets the tone for global rate cuts that don't seem to be happening. The Central Bank of South Africa said the same thing around not being in a rush to cut rates, and so investors are saying, look, we up to a certain point we had thought, okay, this is what was being priced in, and this was always the problem, right?
Yeah.
Anticipating what the central banks are going to do, what's going to happen, is the reason why markets are becoming volatile at the moment. Everybody said, oh, we're penciling in 7 rate cuts for the US for 2024. Now Q1 of 2024 is almost up, and we're like, oh, we might not actually get more than 3. So markets have gone from we expect this to happen to saying, okay, fine, clearly we're going to still have to wait and see, because the decision makers that we thought were and the decisions we thought they were going to be making are not being made. In terms of the JSE as well, I mean, I think there's a lot of companies that are under pressure on the JSE for various reasons.
Because even the earnings aren't really even doing anything.
That's it. So if you look at Impala's numbers coming out, and you look at Northam's numbers coming out, the market already knew that platinum counters were under pressure. So when numbers came out as bad as they did, the market was like, yeah, but we expected this.
Yeah.
You know? So I think you might see that from an earnings point of view, if numbers start to surprise to the upside, markets could have been so under pressure lately that you could see them explode a lot more than what might be necessary. But at the same time, on the JSE, there's a lot more than just company performances that's still pressure, right? So we had our budget speech last week. It was less than impressive on the infrastructure development front and all of those things. And markets are saying local counters are saying we still have to contend with everything that was the underlying fiscal problems that we had leading up to the budget. Nothing really has changed for the better in terms of our situation. And investors are also looking at their, international investors especially, looking at their return profiles. Am I going to take the risk of going into South Africa at this stage when they still need to sort out so much? Or am I going to take my risk premium, price it into another emerging market that has far less developments around it, and that actually has
far less PTP,
you know, but also elections. You can't discount the fact that 50% of the world's GDP is going through an election year. The US included, the UK, South Africa, Russia, India, all of the major players, whether you're looking at continental players, whether you're looking at global players, everybody's looking at that at some point as happening throughout the year. Thankfully for the likes of the US, it is November, so it's fairly far out in terms of pricing for the year. But at the same time, look at the South African situation. That's happening in May, and May is just around the corner. It might seem like it's far away, but it's actually next quarter.
Jimmy, it seems that everybody's dragging their feet. So obviously the central bankers are dragging their feet on cutting interest rates. And so investors are also dragging their feet in terms of going back into the JSE. But also, I mean, the longer interest rates stay higher, it means also that global growth is also going to be affected. Now, you spoke about Impala. Can we then expect still a lot of volatility on that front with those PGM, prices and miners, and that maybe we won't see the light at the end of the tunnel in at least 12, 24 months?
You know, the interesting thing about the miners is I started looking at Impala's share price, and at 64 Rand it is where it's at the moment. I think it could potentially come down to 60 Rand or so, but it's one of those situations where the worst is almost fully priced in, if ever that is believable at any point. But at the same time, in order for Impala and Northam and the PGM counters to actually rebound, you need that demand side. So these guys are saying our production is fine, we can continue to outproduce, but our average sales price is what's being taken out here is that we used to be able to sell at 1,300 rand a ton or a kilo or whatever, and now we're selling at what, 1,100 or 900, and that's having a devastating impact on revenues. I mean, Impala, I spoke to Impala's CFO, I think it was this week as well, around those numbers, and it was production was up, yes.
It was, yeah.
And the main thing was revenues were down 25% from average pricing coming down. So it's beyond their control. And this is why you're also seeing, I mean, we saw, I think it was 2 weeks back, there was a lot of companies coming out with numbers, but also Section 189 retrenchments and restructurings.
Kumba Iron Ore.
Yes, it's not something any company wants to do. It's not something, especially in the mining sector, in a country that is mining heavy and an industrialized kind of country like ours, you know. So it's not something our mining companies want to do. But at the same time, they have to look at the fact that they can't control when the situation is going to turn around. And even when it does turn around, they can't control the magnitude with which demand is going to return. This is unlike the oil picture in Saudi Arabia. The platinum demand is it doesn't function the same way as other commodity like oil or a commodity like gold, for example, where you're seeing that gold still reacts when there's a weaker dollar and that sort of thing. The platinum side is very manufacturing intensive. And again, countries like China, where demand was supposed to be the lead from there and is still expected to be the lead on a global scale, if they're not coming to the party to say yes, then it paints a different picture. I mean, we saw just, I think it was just before we came onto the show, the Chinese government said that, or the Chinese lending community, the banks in China said they're going to be financing, or they approved about $30 million worth of loans in the property space because the Chinese government has said they need to help that property space get off the ground. But the Chinese economy wouldn't be in the state it's in if the Chinese government hadn't meddled from a policy perspective in the first place. So I can't really say that markets at this stage are behaving or reacting the way that we're accustomed to. There's a lot that's at play, and we haven't even scratched the surface around certain sectors that are affected by certain things. I mean, think about Astral Foods. Astral Foods, the share price now might look attractive, but last year they had to take a 2 billion rand hit because of load shedding. And now that's not a small amount.
And now the Competition Commission is after them.
The problems are many.
There are many, but not many for BHP, since we're still in mining. There is a question on BHP. Your forecast or outlook on a 5 to 10 year basis and your investment case for that period.
It's difficult to give forecasts that far out at this stage. You look at BHP's share price at 550 Rand or so, the South African listing at least of that share, right? And you look at how that share price has been performing, you look at the fact that it's gone above 600, it's sort of been trending on an upward curve. It does look good, but when do you get in? Because the last thing you want to do is get into a share that's sort of at the top. And I mean, if I think about an international example off the top of my head, I think of something like Nvidia. That's just clocked $800 and closed the month. You know what I mean? You don't want to, it's a good company, you don't want to miss the AI curve, but are you really going to get in at after a 250% move, you know? So companies like BHP are also re-looking at their businesses, right? So they're sitting back and saying, these are the operations that are successful, these are the operations that are making us money, this is how we want to take the strategy of the business going forward. Are we looking at a greener approach? And you're seeing that with a lot of guys. A lot of international corporates are saying, our global footprint means we can be greener here for now and less green here, and it's a
lot of negotiating.
It's a bit of a balance. And I mean, there's guys that have operations in Australia as well and in New Zealand, and you're saying, okay, cool, that market is performing well, so therefore we're going to put more money into that market as opposed to putting money into the SA market, which is stagnating and could potentially stagnate for the next 2 to 3 years. So I don't want to look at a 5-year forecast on a business that has a global footprint with everything that's happening in this current year that is still yet to unfold. I mean, we're not counting the fact that in this entire conversation we've had, we haven't touched on the updates on the wars in the Middle East and in Russia. We haven't touched on how that's impacting or could potentially impact markets for the rest of the year. So there's still so much in the air that I think there are some stocks where you might be looking and saying this is a good price to get in and all of that, but then you'd be looking at stocks that have been historically quite
Yeah.
depressed, and I mean the likes of Pick and Pay that are at 20-year lows,
Yeah.
is the conversation you're having from a 5-year perspective. But for now, I think it's very much be cautious. Don't be in a rush.
All right. AB and Bev, I don't know if it's also them being cautious because they did come out with numbers and they also upped their dividend, but and obviously they're making progress on their debt, but also it seems that there was some nervousness on the fact that they didn't announce any share buybacks. Is that just being cautious, or?
This is the thing. Companies at this stage are going to be looking to see how they navigate the storm, right? So yesterday I spoke to Val Nijas, who is the CEO at Spur.
Yeah.
And Spur doesn't have debt, right? So their balance sheet is ungeared, which means if they need to take risk, they can take risk. If they need to pay a shareholder and they need to pay out a dividend of 95 cents a share, they can do that because of the positioning of the business at that time. But if you spoke to the exact same company in 2020, November, December of 2020, when they wanted to close down every single Spur, and that was because there was nothing coming through, that's a very different picture. So guys like AB and Bev, who have been in the game as long as they have, are saying, why must we rush or constantly want to pay interim dividends or all of those things when we still have a long road ahead of us? And I think that's what companies do that very often. Companies do that all the time. They'll forego a dividend to say we're restructuring, or they'll forego and do this. But later on, they'll do a share buyback and it'll increase the value for shareholders. I think the fact that a company is not paying out a dividend at this particular time, or they're navigating something else, doesn't necessarily mean that that company is weak. It just means that the management is making a strategic decision to look at the other factors at play, right? So, I mean, yesterday, I'm just trying to think which company it was. I had another results. It was very results heavy this week, you know. And I mean, I was looking at results yesterday for. I'll remember the name of the company and I'll come back to you. But they had an impairment. They had impairments of 1.6 billion rand. Now you've got 1.6 billion rand of impairments that you're putting through. Yes, they're one-off items, but in that financial period, it doesn't seem sensible for you to then overextend yourself as a business. And it's very common for businesses to do that, to take a prudent approach when times are uncertain or when things are uncertain. MTN, for example, the developments that you mentioned earlier with Nolutando around the Nigeria picture, right? Earnings per share, headline earnings per share, everything expected to be down by about 80%. Share price hasn't moved much; it's still at 83 or 80 rand or so. It could put. I mean, there's downside all the way down to 50 rand. But at the same time, it would be prudent for them to not declare a dividend, and one would understand. You know what I mean? So I don't think we should, as investors and market participants, be too harsh on companies when they're making protective decisions. It's different if they're making reckless decisions, but protective decisions.
We should keep in mind what backdrop they're working under. What about Mondi? Because that's also another company that isn't shielded from the uncertain environment. And quite interestingly, you know, they keep on coming out with you know, results, and you can see that they're in a downward cycle. But compared to SAPI, it's seen as the less cyclical stock. So what do you make of Mondi there? Do
you know, I actually haven't been keeping an eye on Mondi and SAPI in the paper space because of the industry in which they operate in, right? So the cyclicality and the downside of their business has been, I don't want to compare it to the commodity cycle because that's a completely different ballgame, but the SAPI Mondi picture has been this way for quite some time, you know, so I haven't really had a look at it recently, but if I were to just sort of look at the stock and see what's happening at the moment, I mean, at 340 rand, you've sort of come off 360 rand highs or 400 rand highs in the last couple of weeks or months. You haven't really done much. The share's sort of been consolidating between a range, anything above 280 rand to 300 rand. It hasn't really been moving much. And that's very indicative of the performance of the company and what's been happening and how markets or the investors are reading the companies to say, sometimes you're having good times, bad times, it balances out, but that creates that consolidation kind of period where investors are saying, let's wait and see what's happening with you. And then you report a good set of numbers, and then the share price moves up a bit. But then the next cycle, you start off the quarter with certain developments that might not be going in your favor. So I've personally, I've stayed away from the paper space and the Mondis and the Sappies. And I wonder if there's anything beyond that to look into. I can't think of anything off the top of my head that says that space is in trouble at this stage. You know what I mean? I think it's just consistent cyclicality.
All right. Before we get to your stock pick, quickly, there is a question on Purple Group. I'd like to know your thoughts on Purple Group at the current share price. Too cheap or too risky?
Risk is relative, isn't it? Risk is it's entirely relative. I say relative because I started my week with a conversation with Christo Visa, and he said he's going diamond mining in the ocean because what is risk? He's a businessman at 82. So risk is relative, right? At 56 cents a share, though, the share price has been under immense pressure for the longest time, since that dip below 3 Rand, ever since coming below 1 Rand.
And the rights issue
didn't happen, didn't go off the way they thought it would. The share price couldn't get back above 1 Rand. It's at 56 cents, you know, I mean, the easy equities business is a good business, right? Before that business was profitable, there was a lot of weight that was put on the other areas of the business, the GT247 business, as well as the Emperor Asset Management business. Now, those businesses in the CFD space, that's a different ballgame, right? That's a different place to play in, and unfortunately for Purple, they've lost market share in that space. And while the easy equities business has now gone profitable, you must remember that 30% of that business now sits in Sanlam. If that business is the only profitable unit within the Purple Group and something were to happen from an unbundling perspective, I'm not saying that's what's on the cards. I'm not Charles Savage and his team. I don't work at Purple. But if you look at what's happened with Transaction Capital, they've unbundled their best asset in We Buy Cars.
And now even Pick n Pay.
Pick n Pay is unbundling Boxer. And companies are doing this. Companies are saying, let's try and extract value however we can. Now, we know that we might not see that from the likes of Naspers, but from the likes of Purple Group, if there is significant enough pressure from a shareholder like Sanlam, it could be something that you could see happen. I don't know. I don't think it'll happen. I don't see it happening anytime now. But to answer the question around whether or not the share price will bounce back, I mean, from 56 cents up to, call it 1 Rand, it's a decent gain, right? It's a decent gain, and I think that's the first hurdle to get over. I would definitely not call it back up to 3 Rand overnight. But if you're looking at a share and you're saying, maybe I'm going to take a risk or maybe I'm going to take a punt on the share, you might find that you might get that. But again, what is your alternative? What is your opportunity cost that you're comparing it to in that space or in another space, and on what time frame?
All right. We have 20 seconds for your stock pick. What will it be?
It's difficult. It's so difficult to give out a stock pick in this environment with all the things that I said, right? So I'm watching a couple of things. Those that are in renewables, Montauk is coming down to a good low. 100 Rand a share there might be good. It's at about 110 Rand a share. I know I'm supposed to give out one, but as you know, I typically look at an array of
10 seconds now, Jimmy.
If I'm going to hang my hat on something, it might be a Coronation. They've gone through what they went through with the tax things, sitting at 30 Rand a share, looking stable. They've accounted for the bulk of the tax from SARS, so might be worth a punt there.
All right. Well, thank you so much for your time and all your analysis and insights. Really appreciate it. That was independent analyst Jimmy Moyaha.